Welcome back to another episode of Weekly Review of Indian Equity Markets. Uh, Before we head into the discussion with respect to price action for the week, let me give out the standard disclaimer. I'm not a SEBI registered investment advisor, so every stock security that we speak about here and that we analyze is purely from a perspective of understanding the market action, price action in the market, and at no point of time it is a suggestion to buy or sell any of these securities which have been discussed. Please do contact your investment advisor to take any specific financial decisions with respect uh, to the stock markets. So now let me come back to the action for the week. What you see in front of you today is on the weekly candle, are the weekly candles, and what a fabulous week we have had. Uh, so we have, apart from the fact that this week turned out to be a one with a long tail and very bullish candle is what we printed at the end of the day, but it was not the same during the midweek. So in the midweek, we saw some fairly aggressive volatile action, and it could have shaken out quite a few long-term investors as well, purely because one, the kind of candles which got printed, and second is the quality of news flow. So the quality of news flow was definitely very strong, and it meant that one should be definitely cautious about it. They should not let go the quality of news flow. Just just as another bit of information, and what I'm talking about is SEBI's consultation paper or SEBI's paper and advice to AMFI, Mutual Fund Industry Regulatory Body. It is a self-regulatory body that mutual fund industry runs, where SEBI has had come out with a note stating that risk measures with respect to mid and small caps needs to be well entrenched in the system, and one needs to look at what kind of risk measures have each of the funds built into their overall scheme of things, given the kind of valuation discomfort that most of us have been talking about for a while, and the kind of rally that we have seen in small, mid, and large caps, small and micro cap space. Just to give you an enormity of the situation, you know, the small cap space typically means that stock number 251 to stock number 500 as per SEBI definition. So any fund manager who's a small cap fund manager would have to predominantly stick to this 250 stocks only when it comes to building a portfolio, and also 65% of the portfolio has to be these numbers, and remaining 35 have to be can be large cap or some element of cash component. Now when you look at the size of the funds, it is phenomenal to see that the largest fund is Nippon Small Cap, which is a 45,000 crore fund. Trust me, I mean, it is unbelievable. A 45,000 crore fund in small cap space means what? It means that all kind of investors, if there was a run towards exit door, there are going to be such a vital or such a strong calamity which can hit. It's like tsunami. It's going to be impossible to exit some of the positions if it were to kind of get into that kind of zone. So that's something which kind of definitely kind of caused some element of stir in the market, and we saw long candle forming, and that's something that we'll see in the charts this week. Yeah, this was a Monday candle. This was a Monday. We had a mild gap down, and then we tried to move higher, but then ended the day lower. The next day was a strong candle, and we ended the day higher, but within the range of previous days, high and low. Then what we saw, this is the day when the small cap, that news became fairly well published and well read, and it caused this one way downward move in the market. And also the next day when we opened up, while we opened slightly higher, but there was extreme amount of pressure to go down, and this is something that we see here. What saved this day, and if you see, we had come very close to this support level. Actually, support, one could say, would have been this as well. So this gap region could also be considered as support. Now we came right into this support region and we tested out the previous resistance, which turned into support, and then we moved higher. This was a Thursday expiry candle, and this could have been much more nastier. There was no way that that something positive could have come out on this day, but thankfully the last 1 hour was savior, or last 30-45 minutes were a savior, and we ended the day. You look at the way last 15 minutes played out. So this is, let us just see this on a 15-minute chart. Let us see how this looks like. Yeah, we're talking about this candle last half an hour. So this is a one-way up move, a sharp up move, followed by another sharp up move, and this is what kind of gave strength back to the market, and then we kind of, and then there was a GDP, positive news around GDP. This candle will kind of ignore, because this is last last candle. uh, but then we had a GDP related news on Wednesday evening, and then Thursday evening, and then we had a solid one way move on Friday. you know we opened, but then we tried to kind of the sellers tried to see if they would want to discount some element of the negative news. So this being an unbelievable rally, people tried to kind of disembark here, and then what we saw that day was a one-sided move. Let's just look at the move after first 15 minutes. We're close to 1.5% move, 1.03% move of the total 1.34% move. So it was a fairly solid, sharp rally which played out on Friday. And then we have this surprise set of candles which got printed. This is a Saturday candle, and the market, we operated for a couple of hours on Saturday. I guess NSE is trying to test out how things work on weekend. Are they prepared? And so we'll leave that this Saturday candle. But the fact is, when this move happened, there were quite a few sectors and stocks which again fell back, or came back into good shape. Noticeable is the fact that how Bank Nifty kind of performed for the week. Let me draw Bank Nifty on the chart. Let's just get into weekly. What you see, in Bank Nifty is essentially, this is stage region. We are kind of trying to come out of stage region. Let me remove all the drawings from here. So last week, when we spoke about Bank Nifty, we said that Bank Nifty looks pretty set to kind of start moving higher. And in all earnestness, there was a high probability that Bank Nifty would start moving with some element of support coming in from private sector banks. Now, what happened for the week was, I think this is so this one, yeah. So this is the 26th candle. Bank Nifty closed lower with a long wick. Then on 27th, we tried to move higher, but then it was an indecisive candle and closed slightly lower. But then this was the downward thrust, and this was a one-way street for Bank Nifty. And then we stabilized a bit on the weekly expiry, and then we started pushing higher. So Bank Nifty had something very meaningful reaction on in this week, and I think it continues to, the structure wise, Bank Nifty continues to remain in a beautiful structure. If you see, we are forming a contraction here. Our stage is almost complete, and if we take off, I think we are definitely up for some interesting times ahead in as far as Bank Nifty is concerned. And Bank Nifty is one of the um, one of the less owned space, and which is the reason why you're seeing the kind of reaction that we are getting in Bank Nifty. And if we carry on from here, I think we'll definitely see some significant traction building in Bank Nifty. Let me also try and quickly take you deeper into the Bank Nifty and see who's doing what. And structure wise, look at the way. So while Bank Nifty itself is yet to print a ATH candle, which is somewhere here, 48, 579. But what we definitely have is, look at the leader here. This is ATH. Then we have another leader here. This is ATH. We're almost there. Then let's look at Axis. So I think this is one space which is again looking very interesting. Contraction is played out. Contraction is played out in case of Axis, and then I think it looks all set to kind of take off from here. So I think this is one nasty candle that Axis has to deal with, and I think from a structural perspective, it is dealing with it pretty well. And if we come out of this stage region, a minor stage region on weekly basis, it's a stage region, a consolidation zone, and we are pretty much there. Axis looks all set to kind of take move ahead, take charge, and move ahead, which is not the case with a few of the other banks. So let's see the laggards, and we have seen the leaders. Now let's look at the laggard. So this is what is laggard looking like. I would consider this as a stage in case of HDFC Bank. Then where is Kotak? Kotak is just not giving any sense of confidence. Look at Kotak. I'm drawing a small stage within a larger stage of so many years. I think from 21 onwards, I think Kotak continues to remain in a box, and it's fully, it's kind of completely given in to the market moves. Imagine the plight of a promoter who must be feeling like what is happening with his stock, given that the entire world is making 3x, 5x, 10x. But I think this is an opportunity to kind of keep building something as far as such kind of stocks are concerned. Look at the way Canada is moving. Bank of India is definitely seeing some element of volatility. PNB we have seen. Indian Bank is doing fairly well. PSB, where is Jammu Kashmir Bank? So I think overall the structure of the market has again kind of improved significantly. We've seen Nifty at Nifty 50. We've seen Bank Nifty. Let us look at what is happening with auto and metal, auto as well. Let's look at few other indices which are key to the outperformance of the market. Look at auto. It is a phenomenal move. There is no stopping this move as far as auto is concerned. Every passing day, week, month, auto is making all-time high. Infra, similar structure, mad move in infra. IT looks to be in a very, very good shape. It continues to build on, right? Well, what I would love to see in case of IT is ideally a down candle plays out something like this, and then it consolidates some amount here, and then it takes off. I think with this kind of down move, it would be a very interesting opportunity to keep adding something as far as IT is concerned, and I would not be perturbed to add a fairly decent position as far as IT is concerned, because this is one under-owned theme which is yet to play out. Now let's look at finance structure. I think pretty much depends on what is happening in Bank Nifty, given that there's large element of overlap between these two indices. There are few leadership stocks within finance like your Bajaj Capital, Bajaj Finance, Bajaj Capital. Let's just quickly go through few of these guys. So, life insurance companies. Let's look at Bajaj Finance, a long tail. Uh, this is similar to Kotak, while Kotak is has kind of completely given up and has kind of gone down, or gone uh, has tested the lower part of this, the 21 low. Bajaj Finance still seems to be in a slightly better condition or better phase. Shriram Finance is doing exceptionally well. I think it's printing very bullish candles, and the move has been very sharp. SBI Life is a leadership stock, is kind of has broken out, tested, retest of the breakout, and then carries on from here. Chola Finance, structure wise, it's good. Uh, at this point of time, though, I can't find too much of fault with the structure, though the stock is correcting. AMC stocks are doing exceptionally well. Look at the up move in AMC stocks. Even from here, 25th September, the return could be as decent as 15-20%. Sorry, my bad. It is 45%. So you look at the way AMC stocks are doing, look at the way few of the wealth management counters are doing. So the writing is very clear that wherever consumption and consumer discretionary is in play, I think we are seeing sharp continuous up move as far as the market is concerned. Now let's look at, I think metal index is another index which has done all the right things for the week. Uh, FMCG, I'm an interested party. Last week we spoke about FMCG, that it is in a beautiful structure and there is definitely opportunity as far as FMCG is concerned. And from a value perspective, FMCG gives you much better value as compared to most of the other indices. A look at pharma, again all-time high, metal broken out and heading higher, much higher. And within this, I think the large caps like Tata Steel is doing very well. Tata Steel, SAIL are doing exceptionally well. So I think overall the texture of the market, the broader indices continues to remain very strong. This is one sector which is definitely interesting at this point of time. Look at the way breakout has happened, and there's a upthrust which is playing out in this sector. So the stocks in this sector are definitely something that one has to keep a close eye on, and this sector is going to give some mega themes or mega opportunities as far as the market is concerned from here on. Reality, another beautiful retest of breakout, and again tries to move higher. Microcap still consolidating, still kind of printing long tail, which is exceptional. Healthcare, we have seen a sharp, a very strong down move candle. Small cap consolidation, we are seeing a 4 weeks consolidation. Range formation, we observed this last week and we continue to remain in that range. PSU Banks have again got their mojo back and continues to move higher. Nifty Junior is how can you, what do you do with this kind of rally? The rally just keeps moving. The market just keeps moving. 27% at an index level. I think this kind of return gets printed in 2-3 years time, not 5-10 weeks time. So I think it's a beautiful rally which is happening out there in the market. Consumption, long tail, retest of breakout. Public sector enterprises continues to move higher. Oil and gas, now it is consolidating. Let's see what happens within the oil and sector. CPSC, some element of consolidation given the kind of run up we've seen. Nifty Energy up move. Service sector we have already seen. I think overall all the all the segments of Indian markets are doing extremely well. They seem to be extremely well poised, uh, and there's continuous amount of positive news flow which is happening. I think government has done all the kind of heavy lifting that one could expect, one beyond expectation of anyone. And when I say anyone, I'm not talking about people in general or general commentators of the market. I'm talking about the industrialists who engage with government on a daily, weekly, monthly basis. I think they've done all sort of positive possible things, all the kind of heavy lifting that one needs to do. So I think government is seriously back in business, and this is something that we'll have to see how it kind of starts making and moving much higher from here, or how it kind of pans out as we move ahead. One word of caution: anything which moves up vertically like this will definitely cause some bit of heartburn. So please be careful. It's a suggestion that one should definitely onboard as we continue to remain in a fairly strong and bullish trend. Now let's look at some of the other key indicators that we track on a weekly basis. I think without doubt this year Nikkei takes the cake of one of the strongest performer, and the comeback has been phenomenal. I think the last 30 years, whatever Japanese folks could not do has got done. Unfortunately, we have data from 2017, and that is when Nikkei has started doing well. But look at this COVID 2020, this COVID thing. Nikkei was at, I think, 16,500, 16,700. Today we are at 40,500. What's the size of this move in last 4 years? We moved 140% at index level. Uh, let's see this year to date. I think Japanese market YTD would be so 20%. Japanese market has done 20% kind of return for the year, and we are just sitting on and we have just completed 60 days in this year. That's the kind of money which is being made in Japanese market. So the rally is phenomenal. It is unusually strong rally which is playing out across the globe, and this is something which we kind of envisaged. A breakout of this a breakout of this area would again cause the markets to move consistently higher. I look at the kind of candles which have got printed, and we continue to move much higher from here, or we move much higher from these levels. I'm not talking about moving higher from here, but I'm talking about moving higher from here. So Nikkei is doing exceptionally well. Let's look at Nasdaq. Very sharp up move once again after a strong result coming out of Nvidia. So this week we have seen 2% plus kind of gain as far as Nasdaq is concerned. S&P 500 has done 1% plus kind of return uh, on the back of again Nasdaq rally that we are seeing. Uh, what has Dow Jones done for the week? So yeah, there's some element of breather which Dow is taking when other two indices are doing well. So I think let's look at benchmark. We are hovering at 7.05. There is consistent amount of money flowing into this asset. I think this asset will do very well in 12 next 18 to 36 months. One should not have any element of doubt as far as this instrument is concerned. Uh, Let us look at 10 years. Let's look at gold and oil. So this is gold. Now, this is a surprising move. Gold is again contracted well and now wanting to break out. This looks interesting. Last week, gold has moved by 2.5%. The contraction is pretty good. Long tail, going through consolidation. I think gold is looking very, very good on the charts. One should definitely keep a closer eye on this. Let me mark it. And then what's happening in oil? Oil continues to contract in this region. We were also tracking Korean market, which had done beautiful contraction. So it has taken first. It is it is stopped exactly at the resistance zone. So let us see if we can take out this sometime zone, or we are likely to kind of contract even further from here. But I think Kospi is a beautiful shape. Similarly, we were tracking one more index, which was small cap. A small cap is breaking out, has broken out. So without even iota of doubt. Okay, so let me. The small cap is kind of take broken out of the slightly stronger resistance zone, and it's trying to kind of come out of the next level of resistance zone. I think it's a big, beautiful opportunity that is brewing here. Let's see how things pan out from here. So broadly, uh, when we look at the structure of the market very clearly, from my perspective, the way I see some element of actionable is FMCG is something which I'm interested in. Consumer durable has definitely broken out fairly strongly, so that's an area of opportunity. And then Bank Nifty is something that we have discussed a couple of times. We have discussed about last week as well about Bank Nifty. So I think these are the pockets of opportunity that are visible at this point of time. Obviously, at an individual stock level, there are many other opportunities which can keep coming up, but these are clear opportunities at index level that one should try and seek advice on, and see how things were to build up from here. So with that, I'll come to the end of this episode. Wishing you a good Sunday, and look forward to catching up with you again next week. Thank you so much.